Good afternoon, everyone. I'm just laughing because it is Sunday, the 9th of August. It's a very nice 30 degrees afternoon in the UK, and of course that means that everybody's out mowing their lawns and stuff. So there are some background noise, so please bear with me. So, all right, I'm going to start off by having a look at the currency, starting off with the US dollar basket. So we've been overextended a bit on the weekly and kind of broken through on the monthly. We look okay. We look fine. We've now produced a double bottom. I was anticipating a retracement last week. We kind of just tapped that and headed down again. Now we've kind of produced a double bottom, and I'm just going to have a look and see if we do have any divergence in that. So we have bullish divergence in that particular case on both indicators, which implies that we're going to get a weekly retracement at this point in time. So a weekly retracement should mean that the weekly is going to find us heading up again back into this area. This makes the most sense to me. And I would just look at fib levels, but it's likely to be as high as 96, but probably not that much, probably closer to the 94. Having said that, all right, so let's just fine. So that's what I'm looking for here is a weekly retracement, and so it'll be a little bit higher, which means that this week we'll start off with a slightly stronger US dollar, and then we'll see how it copes if there's some strong resistance at 94, if it can break a little bit higher. But I do anticipate a shorter term move to the upside, which means a stronger US dollar, which means that other pairs will weaken and then continue out. Perhaps by the end of the week, it's already recovered and resumed its trend. So let's see how that goes. Euro dollar, same thing again. We've got a double top. We're overextended. We're encountering 1.18, which is significant monthly resistance. And therefore, I think a weekly retracement down to 1.14 would be great, because that would be a test of previous resistance, would be tested as support. That'd be fantastic. It's almost certainly a Fibonacci level. But it doesn't have to be. That would just be, to me, a logical, rational retracement, and it makes a lot of sense. However, failing that, probably closer towards the 11.6, okay, 1.16 level. All right, so basically what I'm going to be looking for this week is maybe shorter term opportunities to the downside against a stronger US dollar, but certainly being prepared or being aware that I am trading within against the prevailing trend. So the prevailing trend for the moment is a weaker US dollar, but this week initially it's going to be stronger. So for traders who are going to be looking at the lower time frames, there's probably going to be an increase in volatility, and if they it'll be either trading with the temporary trend on the, let's call it, sub 2 hour time frame, versus trading, and that'll make more sense, because as the trend kind of, whether the dollar is strengthening or weakening, the traders will be with the trend. Once you get to the 4 hour patch, you're going to be stuck between the two, and the daily, of course, is going to be kind of swinging wildly. So the much lower time frames are probably going to fare better if we stick with those. Sterling as well, I expect a bit of a retracement back into these previous highs. 1.27, 1.28 would be fantastic. But also, just looking at it here, I think it's got its eyes set on 1.33. I think it's reasonable to me to see that strengthen. So overall, it would be interesting to me this week if sterling actually is, relatively speaking, stronger than the euro dollar, and actually just pushes up to connect to that 1.33 level. Aussie dollar, starting to top out a bit here. There's definitely going to be some bearish divergence, and so my expectation is certainly of all the pairs to see Aussie dollar head lower and weaken. Kiwi dollar, absolutely strong resistance here. It's starting to test this level of support, breaks through that, makes sense that it's going to head lower. So I think both Aussie dollar and Kiwi dollar are going to be weaker than sterling. I think sterling is going to be okay, which is unusual, because normally I would just do a blanket assessment on everything against the dollar, but I think there's some case here for cable to go higher and for Aussie and Kiwi to head lower. But euro dollar itself is also double topping. It's going to be pretty much inversely correlated. Let's look at dollar yen. So dollar yen, I've been busting dollar yen's balls for a while, because I've always said it's kind of largely range bound, and there are reasons for that. But there's no doubt at the same time that it is creeping, the flow of price is creeping down towards that 105 level. And I think that there's a strong possibility that it's going to break out below that in the near future, whether that's in the next 6 months or whether that's in the next year, to see it break down and head down a little bit lower. And because that looks like that's where the pressure is heading, and that's likely going to be the case. But again, until it actually breaks out the range, that's fine. I'll just hold it on that. And you can see there's some strong buying at that point, and I think certainly the Bank of Japan is going to make sure that they support that, because they're really going to want to do that for their policies in terms of that. Dollar Swissy, is going to be pretty similar to euro dollar, with the exception that the Swiss National Bank, the SNB, in the long run, they very much do not want their currency to head lower. The problem is that it's also very popular because it's a pretty stable currency, and so it will, you know, there is this, there is a tendency for it to strengthen, but they really don't want it to be the case. So as I said, I'm now kind of watching out for intervention talk, because they start with intervention. The problem is that they always tend to do the surprise thing, which for lack of a better expression, screws the market entirely when they do a surprise intervention and pushback, which is what's happening here. And that's a big part of the reason that the currency really hasn't gone anywhere for several years. You can actually see the fact that this is where they were talking about it, then they did actually push back, broke the market for a while, then they did it again for no real apparent reason. There's a story behind it, but what I mean is from a chart perspective, there was no reason, and this just broke, and so subsequently, you know, traders aren't really interested in pursuing that, and so you get a number of different activities on these charts. You'll get, remember, don't forget, you've got tourists exchanging money, you've got businesses transferring money back and forth between each other, you've got, you know, expats sending money to their families. So there's a whole lot of other transactions other than just traders. But what this has done is just remove the trading aspect to it. So now you've just got your normal transactions, which would be the rest of the kind of market transactions. So I'm likely expecting a bit of a pullback on this time, and I think the SNB will probably participate a little bit in that if they're sensible, so likely to see that be the case. Now dollar CAD has pulled right back down, steady kind of selling at that point and back down to levels of support, and it's also looking a bit bullish around support levels there, and the daily here is starting to look a little bit more bullish. So all of this really indicates a slightly stronger US dollar in some of these pairs. Again, dollar yen, dollar Swissy, and dollar CAD are the least appealing to me because they've got a whole lot. Dollar yen and dollar Swissy have policies that make their currencies a bit of a problem, and they're not afraid to intervene. So they're not afraid to mess with the system. Dollar CAD is just a bit all over the place. It's very much a commodity currency, and so oil is very much tied to Canadian dollar as well. There's a kind of a relationship there, which leaves euro dollar, sterling, Aussie dollar, Kiwi dollar as being right now, or certainly for the last couple of years, tend to be the ones that are the most preferred ones to trade. So that's really what that's going to be my sort of trading plan going forwards. Very quick note, because I'm on it, of course, is pound Aussie, euro Kiwi, longer term, just looking at that flow. This is a really nice level of resistance, which has become support, nice bullish candle. Looking for euro Aussie potentially to climb this week. Euro Kiwi, absolutely looking for nice longs on that. And really the one that caught my attention is pound Aussie is also potentially looking to do that as well. I've got separate analyses on that, and pound Kiwi most likely to do that, which actually makes sense if we see the Aussie and Kiwi dollars weaken and sterling looks quite nice and strong in those cases. So that's what I'm looking for. Euro GBP is at the top of its monthly level here, trying to determine what it's going to do. If the euro doesn't do much and the pound strengthens, we're going to see this drop from this level, and it's pretty much still range bound. The total kind of the final consequences of Brexit and its unfolding haven't really become clear just yet. In other words, we haven't really seen the end story of that. So other than that, that's really going to be my focus for this week, is expecting a stronger dollar initially, and then until we head up, until I see the market head up towards these levels, and then I'll be looking for potential turning points, and possibly by Friday, either a rejection candle, or by Friday it's actually started to head a little bit lower. And I'm going to leave you on that. What I do want to do is have a quick look at the economic calendar, just having a look here for this week. So I'm looking at high impact news only. In terms of, so I'll focus first of all on the US sessions. Okay, US sessions expecting some news, but we've got interest rates out of New Zealand, so that always causes a disruption, usually. We've got sterling stuff. I'm not too worried about these for now, because really most of the focus is sitting on the US dollar, and so that's really going to be focused, I think, this week more on the retail sales, possibly on PPI as well. So a couple of these, because we know the jobs are bad. We know we'll have a look at manufacturing as well. But so these are really the key kind of news announcements I'll be cautious with on any given day. But most of the attention is sitting on the US dollar, because of their kind of the status on things, with a little bit left over locally for these things. But yeah, so that's really what it's going to be, and that's it. So have a great week. Thank you very much.